opinion. It's the same thing, it's just different terminology. Unmodified being for a non-issuer is terminology that the AICPA's Auditing Standards Board has issued. Unqualified is what the PCAOB wants in connection with an issuer's financial statements. If it's unqualified or unmodified opinion, that's what the client wants. That's the one that looks good. That's the granddaddy of them all. That's the best thing possible. And we'll be delighted to give that to the client to express that kind of opinion if we feel the statements are presented fairly in all material respects in conformity with U.S. GAAP. However, it's possible we might have to start going downhill. And the first step down might be where you have to issue a qualified opinion. A qualified opinion will indicate that, in your opinion, except for something, the statements are presented fairly, except for something. So the qualified opinion, issuer or non-issuer, the terminology doesn't change, would be an except for qualified opinion. Now, it could be except for a departure from GAAP. If there's a departure from GAAP, it could be a not so bad departure, or it could be a really bad departure. If it's not so bad, so that the statements are not rendered misleading, we can give an except for qualified opinion. So, except for the failure to capitalize certain lease obligations, the statements are presented fairly, except for. If the statements are really misleading because of the departure from GAAP, then you'll see we'll eventually get to it. We issue an adverse opinion. Could also be that a qualified opinion is issued in the case of a scope limitation. Scope limitation is when you're unable to do something that's either required or would be considered necessary in the circumstances, which means we have an inability to do something. So it might be, in our opinion, except for, that's why it's called an except for qualified opinion, except for our inability to, we'll say, observe the physical count of a portion of the inventory, except for, and then it goes on with the wording of the qualified opinion. So two possibilities for a qualified opinion. One would be a departure from GAAP. That's bad, but not that bad. And the other would be a scope limitation. There too, that's bad, but not that bad. It's a really bad scope limitation. You'll give a disclaimer of opinion. So Manvia says, you are right, Professor. Rental income for the LLC reports on it, but isn't that if your property is rented to, I lost the bubble. It's rented to Airbnb, like hotel services for short term. It's listed on Schedule C. I don't know if I'm still wrong. Well, if it's considered rental activity, then it does go on Schedule E. If it's Airbnb, so hotel, so it depends on how you classify. If it's a service that's performed, not rental, service does go on Schedule C. But that's completely, and I hate to say it, it's not relevant to this course because that's taxation. All right, so I guess we can move on. Let me get back to meeting chat group. Okay. All right, so we understand the qualified opinion?
Yes.
Good. Now, once upon a time, in my time, there used to be another type of qualified opinion, and that was called a subject to qualified opinion. It used to have to do with loss contingencies, But eventually the AICPA got rid of that kind of qualified opinion. I mean, it used to say, in our opinion, subject to whatever it was. That's gone. There's only one type of qualified opinion. What do we call it? I know. Somebody call on me, please. Go ahead. Just somebody say Professor D.
Professor D.
Thank you for calling on me. The only type of qualified opinion is now called an except for qualified opinion. So that was a step down from the unqualified or unmodified opinion. Clients don't like the qualified opinion. Doesn't look good. But then if you want to go really all the way downhill, there's something called an adverse opinion. An adverse opinion is when you're going to state in your opinion that the statements are not presented fairly. You're going to get rid of that clause in all material respects. You're just going to say it's not presented fairly in conformity with US GAAP. That's when you have really severe departures from GAAP. That might be where you have pervasive, meaning widespread departures from US GAAP. For example, you did the audit and you concluded that the client has capitalized property, plant, and equipment at replacement cost. Say what? How's property, plant, and equipment supposed to be valued on a balance sheet? Somebody give me a good answer. It won't cost you anything.
Fair market value.
Well, fair market value, same thing, is pretty much like replacement cost. That would be definitely a big departure from GAAP. So how are you supposed to see valuation of property, plant, and equipment? It won't cost you anything to give me the right answer, historically speaking. Subliminal hints, two of them.
Historical cost.
Good, Manure. Two words there, historical cost. But they're using replacement cost. That's definitely a violation of US GAAP. And if we're talking about materiality here, and it's really material, statements are totally misleading. If you did the audit and you noticed that the client was not using for inventory LIFO or FIFO, but they were using NIFO. Anybody know what NIFO is? Good answer. There is no such thing as NIFO. But if they were using a non-GAAP method and it materially affected the statements such that they were misleading, you'd have to give an adverse opinion. Where in print you're writing the statements do not present fairly financial position, results of operations, and cash flows. You think a client wants that kind of report? What do you think?
No.
No. Heck no. So your first approach is to go to the client and say, hey, client, what the are you doing? You can't present things like that. Now, if you have a good client, the client will say to you, well, why don't you tell me what to do? That's what I'm paying you for. If that's the case, you suggest that they value it properly. If they do, and everything is now in conformity with GAAP, not just there, but throughout the financial statements, what kind of opinion would you give them at that point? If everything has now been restated and is presented fairly in all material respects, what do you give them? The people try to get involved here. Alex. No, Alex.
Can you repeat the question again? I'm sorry.
Yes. If you went to the client and you said to the client, your financial statements are really misleading. And then they say to you, well, what should I do? Because what do they know about accounting? And you tell them what to do, and they restate things, and everything is now presented fairly. What kind of opinion would you give them at this point if everything is presented fairly?
Um, I mean, if everything's presented fairly, then there's no problem then?
Yeah, there's no problem at that point.
Yeah.
What do you give them? Kind of opinion?
Qualified opinion.
You say qualified opinion. There's no problem. Things presented.
Reasonable?
What's that?
Reasonable.
A reasonable opinion? There is no such thing.
Oh, sorry, it's unqualified.
Opinion?
Qualified if it's an issue, or unmodified if it's a non-issue. Right. It's like there was never a problem because they fixed things. But if the client says to you after you told them what to do, no, I'm not changing anything. If that's the case and the statements remain as misleading, the only kind of opinion you could give them is what? If the statements are misleading and the readers could be duped, adverse opinion. Now, before you actually issue an adverse opinion, the client will probably give you two words.
Ta-ta.
Ta-ta, they're going to fire you. They don't want to see that kind of opinion, so you'll be out of there. So the odds of you actually issuing an adverse opinion, let me do a quick calculation based on my 50 years of experience. Got a little calculator up on my forehead. My calculator doesn't give me numbers that low. So it's unlikely that you'll ever issue an adverse opinion because you'll be fired before you issue that. But if the statements are misleading, you have no choice. You'll have to give an adverse opinion. And then we have the possibility of a disclaimer of opinion. A disclaimer of opinion is issued when you're unable to express any opinion whatsoever. You have an inability to form an opinion. You're unable to form an opinion. That results in a disclaimer of opinion when you're unable to form an opinion. So let me ask you this. If you notice that the statements contain major departures from GAAP, would it be appropriate for you to issue a disclaimer of opinion? The answers are either yes or no. Yes or no?
No, you should issue a adverse opinion.
Yeah, that is correct. You can't give a disclaimer. Disclaimer is when you're unable to determine what kind of opinion. You know, if there are major departures from GAAP, the statements are misleading. You'd have to give an adverse opinion. Good answer, Eric. Thank you very much. Now, what follows in the notes under the disclaimer of opinion is a little table. But before we get to the table, what do you think the odds of you're issuing a disclaimer of opinion? Now, if you're going to issue a disclaimer of opinion, you're basically telling the client, oh, client, thank you so much for all that money that you gave me. Sorry, can't form any opinion whatsoever. Client may say, well, give me my money back. And you'll say, touch black, you can't have it back. I'm touching the screen like I have a touch screen. I don't have a touch screen. So let's see. Touch black, you can't have it back. You're not going to give the client the money back. Are they going to be happy or ticked off at you because you took their good money and you're saying, Sorry, can't form any opinion. They can be happy or ticked off.
Ticked off.
They're going to be ticked off. So you're probably never going to issue a disclaimer of opinion. Now, we know that my notorious career has spanned now, well, July will be 50 years. Oh, God, that still hurts. How many times do you think I issued or was responsible for the issuance of a disclaimer of opinion? I'll give you a hint. It's not zero. Well, Anna says a few, but if you're looking at the screen,
Once.
just
One.
once, just once, that is correct. What happened was I went to a client one day. This was when I was an employee at a CPA firm. And I did the audit work. And at the end of that audit, I had to draft a disclaimer. Now, this was a client that I used to love going to. Now, I'm an early bird. So if there was any way possible of me getting to the client early and finishing early, that was me, because I knew that if I finished early, I wouldn't have to go back to the office. I could take the rest of the day off. So I would get to the client like at 6:30 in the morning, start working. And they had a bookkeeper that I thought was fantastic. Her books looked like they were put together using calligraphy. You all know what calligraphy is? It's fancy writing. Beautiful, beautiful set of books. But when I got there that one day, I was very disappointed. Turns out that the bookkeeper died. So that meant that there was no bookkeeper, which meant that the plant manager, because it was a warehouse, the plant manager took over the accounting. What do you think a plant manager knows about accounting? I'll give you a hint. Zip zilch naught nada non nil nihil mayo oriente ephes rien goose eggs diddly bupkis squat mo mayo. So Manvia got it right, and a few other people are getting it right. Knew nothing. Zero about accounting. So I said to him when I got there, I said, okay, I need the general ledger. He says, what are you talking about? So I explained what the general ledger was. He says, I don't do that stuff. I said, all right, I need the cash receipts and cash disbursements journal. He says, what are you talking about? I don't have any journals. I said, all right, let me have the bank statements so I could see the canceled checks. Now, this was in the good old days when bank statements did return the checks. Now, if you're lucky, you get the facsimiles of the checks. Got to pay for that. Terrible. He said, I don't have the bank statements. So I said, how could you not have the bank statements? He says, if I get a bill, I pay it. If I pay it, what do I need to keep, the paperwork for it? I paid it already. It's gone. I said, nice. So he basically was telling me he had no books. He had no records. Could I perform an audit if there's nothing documented in writing? What do you think? No. So I had no choice. I had to put together a disclaimer of opinion. Couldn't look at anything. I asked him for copies of the sales invoices. I don't have. I said, what do you mean you don't have those? He says, I sent out the bills. They're never going to stiff me. They always pay because the owners of the business are the ones that I'm selling the service to. So it wouldn't be right for them to stiff the business. I said, oh, okay. Had no evidence whatsoever, and we know that we have to obtain sufficient appropriate audit evidence to afford us with a reasonable basis for our opinion. So I got back to the office that day and I said to the secretary, here's a copy of the disclaimer of opinion that I need you to type. Now, back then, we didn't have computers. They hadn't invented the PC. Oh, God, that's so long ago. So the secretary had to type it. Nice. And there was a disclaimer of opinion in there. But you have no choice if the statements are what? not auditable. So we disclaimed an opinion. The boss called me in on it. I had to explain. He says, well, that's the only thing you could possibly express. He ended up sending it to the client. The client called him up when he got it and said, 2 words. What do you think those 2 words were? You think it was you? No, they said ta-ta. They fired us. So you issue a disclaimer, you're pretty much getting canned. The firm is getting canned. Not the auditor who drafted it, but the firm. All right, so we understand the difference between a qualified opinion, adverse opinion, and disclaimer of opinion? Yes?
Yes.
Good. Now, what you have next is a little table. And the table, I think, is kind of cool. It talks about the materiality of the problem. And of course, materiality, the financial importance of something, is a matter of what I call professional judgment. And you have 3 possibilities. There is either no problem, or there is a problem that's not really significant, meaning it's immaterial, or it could be material but not pervasive, meaning widespread. And then there's the possibility that it could be material and very pervasive, meaning very widespread. The second column says financial statements issued are materially misstated. Well, if there's a material misstatement, it's not going to be the good situation. If there is no material misstatement, or there's a misstatement that's not material, meaning not significant, fine, you give them the standard report, the unmodified opinion, in the case of a non-issuer, not a publicly traded entity. If it's an issuer and there's no problem, then you give the unmodified. Let's try that again. You give them the unqualified opinion. Unmodified for non-issuer, meaning a private entity, and then unqualified for an issuer, meaning a public entity. But if things are starting to go downhill and there's a material misstatement, and it's bad, but not that bad, you'll give a qualified opinion. Makes no difference whether it's issuer or non-issuer. If the departure is severe, meaning the statements are misleading, whenever you hear the word misleading, what kind of opinion do you give? Adverse opinion. Then the third column says inability to obtain sufficient appropriate audit evidence, which means you have a scope limitation. Scope limitations have nothing to do with U.S. GAAP. It has to do with U.S. GAAS, generally accepted auditing standards. So if you don't have any scope limitations and you got your evidence and you're satisfied that the statements are presented fairly, then unmodified opinion for a non-issuer, unqualified opinion for an issuer. If, on the other hand, there is a scope limitation that is significant, meaning material, but you can still form an opinion, then you give a qualified opinion. If it's impossible for you to form any opinion because of the scope limitation or limitations, then you'll disclaim an opinion. Any questions on that? What do you think?
No.
No. So if there's a really bad scope limitation, you can't form any opinion. So you'd have to give a disclaimer of opinion. So the highest level of service is called an audit. Is there a lot of work or a little work involved? To perform an audit, a lot of work or a little work?
A lot of work.
It's a lot of work. If there's a lot of work, do we charge a lot of money or a little amount of money?
A lot of money.
A lot of money, right? It's the granddaddy of them all, the highest level of service. And the only one who can perform an audit of financial statements and issue an opinion is a CPA. So hopefully you're all going to become CPAs. The objective of an audit, the primary purpose of an audit, is to express an opinion as to the fairness of presentation of the financial statements in terms of their conformity with the applicable financial reporting framework, which is typically US GAAP. I think we may have mentioned that it could be a different basis of accounting. Did we discuss that? Which we said used to be called ACBOA, Other Comprehensive Basis of Accounting. Today we'd probably call it a special purpose basis of accounting. But typically the statements are supposed to be in conformity with GAAP. Why would a client want an audit if it costs a lot of money? Now, typically clients call us the CPAs, cheapest people alive. Clients are typically the cheapest people alive. They don't want to pay anything. They think everything should be for free or for a low fee. So why would a client want an audit? Well, if it's an issuer, they have no choice. They have to undergo an annual audit. And there may be a specified reason why they need an audit, other than the fact that it was an issuer. Non-issuer may be going to the bank and applying for a mortgage, and the bank insists on audited financial statements. Fine, then the client has no choice. They're going to have to give us the big bucks to do an audit. But the audit, in terms of a service, is the highest level possible. It's like the top of the spire down in the World Trade Center. You all know what I'm talking about, all the way at the top? Yeah? Cool.
Yes.
But a client doesn't always have to undergo an audit. So there's a lower level of service. So if we drop to the middle floor of the Freedom Tower, you have what's called a review of financial statements. A review of financial statements. Just going to turn off the mic and for a second. I'll go away. Sorry, had to blow my nose. I didn't think you want to see that or hear that. So a review, we'll say, is the middle floor of the Freedom Tower. Nowhere near the level of service of an audit. It's substantially less in scope than an audit. But it is a rather high level of service. In a review, you hope to express what's called limited assurance. Limited assurance is a statement to the effect that based on my review, I am not aware of any material modifications that should be made to the financial statements in order for them to be in conformity with the applicable financial reporting framework, which is typically US GAAP. So I'm not saying that I'm not aware of any material modifications that need to be made in order for the statements to be presented fairly in all material respects, because that's terminology for an audit report. I'm basically saying, based on my review, I'm not aware of any material modifications that need to be made for the statements to be in conformity with, we'll say, US GAAP. That's a big difference. Opinions up here, what we issue in a review, which is called limited assurance, way down in the middle. And a review consists primarily, meaning principally, meaning mainly, of inquiries of company personnel and analytical procedures applied to financial and non-financial data. What does that mean in plain words? In a review, there basically are two categories of procedures that you perform. There are a lot more procedures in an audit, but in a review, you're basically asking questions of insiders. Could you be asking questions of the president, vice president, secretary, and treasurer? Yes, they're insiders. Could you be asking questions of internal auditors? Yes, they're insiders. Would you be asking questions of the client's outside or external legal counsel? No, why is that? Because they're not insiders. That would be relevant in an audit. So you're going to be asking questions of insiders. Could you ask questions of the board of directors? Yes. Could you ask questions of senior management? Yes. Could you ask questions or pose questions to the supervisor of the dietary department in a nursing home? How far-fetched. Would that be relevant in a review? You're auditing a nursing home, and they have a dietary department, and they have costs. Costs are an integral component of financial statements. Could you ask questions of the management in the dietary department?
Yes.
Yes, they're insiders. But you don't ask questions of outsiders for an audit. And then you perform analytical procedures, which we didn't discuss yet. But I'll tell you that analytical procedures merely involve comparing relationships between data, financial and non-financial data. Give you an example. Here's last year's financial statements. Here's this year's financial statements. Could you compare on a line-by-line basis the amounts? Revenue one year, revenue the next year. Yeah. If there is a significant fluctuation from one year to the next, whether it's this way or this way, that's going to warrant investigation on your part. So you do these analytical procedures, which we'll get into more detail as the course proceeds, and you ask questions. That's in a review. It's nowhere near the level of service called an audit. But is that a high-level service? What do you think? You're asking questions, you're making all these comparisons. You think that's a high-level service? And at the end, we give what's called limited assurance? High level? Low level? Well, I wouldn't say it's a low level of service because in this service, we are giving some form of assurance. And whenever you give a form of assurance, somebody's going to rely on those statements. So that's a moderately high level of assurance. They can't place the same level of assurance or reliability on those statements as they would if it was an audit, which is the granddaddy of them all. But it's a higher level of service than the two lower ones, which we're going to talk about shortly. So do we get good money or bad money?
Good money.
Good money, exactly. Good answer. Repeat after me. Everybody, I want you to turn on your mic for a minute and repeat after me. You ready? Here we go. As a CPA,
As the CPA,
As a
As
CPA,
CPA,
I will always
I will
I will
always
I will
always
always
charge the client
charge the
charge
client
the client
charge the client
as much as is inhumanly possible.
as
as
much
much
as
as
humanly
as
possible.
humanly possible.
inhumanly possible.
So in other words, you're going to charge the client whatever you can get out of them. So it's a higher level of service. Good. Don't give your services away for
Free.
free. Exactly. Perfect. So that's a review. So here's a question for you. True or false? If you perform a review, you might be able to express an opinion as to the fairness of presentation of the financial statements. Maybe you want me to repeat that?
Yes.
Yes.
If you perform a review of financial statements, you might be able to express an opinion as to the fairness of the financial statement presentation. I see a false pop up. Yes, that's correct, because the only time you can express an opinion is if you perform what kind of service? An audit, exactly. There's another question. True or false? After performing a review, you will normally express negative assurance as to whether there are any material modifications that should be made to the statements in order for them to be in conformity with the applicable financial reporting framework. True or false?
False.
False. Why is that, Eric?
Because you're not supposed to automatically make a negative assurance. You have to do it. You have to do it based on the evidence that there, or the lack of evidence.
All right, so you got evidence. You'll see at the end of the semester we call it review evidence. So is there a problem expressing negative assurance?
No, unless the situation warrants it. Unless there's evidence backs it up.
Anybody agree or disagree?
I agree.
You agree. Anybody
Yes.
disagree? See my hand? I disagree. You don't express negative assurance, you express limited assurance. Terminology. Do we understand the distinction?
Yes.
Wording is very, very crucial. True or false? A review is substantially equivalent to an audit. Substantially.
False.
False. Right. It's substantially less in scope than an audit. Nowhere near the level of service of an audit. But it is a higher level of service than the services below. So would you say that that's a good service to possibly perform a review? What do you think? I know it's Monday and you're all tired, but try to, jump in. It's a good level of service. Now, I've had clients in the past call me up and say the bank wants an audit report, to which I would reply, well, I didn't audit your financial statements. So they'll say, well, can you? I said, sure, I could do that. And then I reply, it's going to cost you a lot more money, and it's not going to be overnight because there's a lot of work to be done. So I'll tell them to call the bank and ask them if they'll accept a review or either a compilation engagement or a preparation engagement, or maybe even accept a tax return, because basically what's on the tax return would be in the financial statements. And hopefully the bank will let them get away with the lowest form of service. This way it doesn't cost the client extra money. So now we know two levels of service, audit and review. So if the audit is at the top of the spire and a review is on the middle floor of the Freedom Tower, then we can go to the first floor. You can't see the first floor because I got the computer tilted. The first floor would be where we perform a compilation of financial statements is different today than it was years ago. A compilation is limited to assisting management in presenting in the form of financial statements information that's their representation, assisting management in preparing the statements. Interesting. Once upon a time, the definition was different. It was limited to presenting in the form of the financial statements, management's information. You say, what's the difference? We stuck in one word. Now, a compilation is where we assist management in preparing the financial statements based on their information, based on their representations. Now, between us, how much knowledge do you think most clients have in accounting? Well, I heard the answer in my head. In my head, I heard zip zilch not a non nil nihil male oriente efes rien
Limited.
bupkis squat mo mayo. So what kind of knowledge do you generally think clients have about accounting? Generally, talking
No
about
knowledge.
a non-issue. They know nothing about accounting, right? So between us, do you really think we're assisting them in preparing the financials, or do you think we're actually putting together the financials? What do you think? Assisting or helping them, or we're really doing it for them most of the times?
Doing it for them.
We're doing it for them, right? But we can't say that that's a compilation because we're only supposed to be assisting them. But if we did assist them, then we would issue a compilation report, which we'll get to at the end of the semester. But then if you want to go three stories below sea level, we would have a different level of service, which is the newest one in connection with financial statements, and that's preparation of financial statements. Lowest level of service. And in this case, we're actually preparing the financial statements for them. But we're preparing it based on assertions made by management that are their representation. Is that a high level or a low level of service?
Lower level service.
The lowest level of service, exactly. So is that going to cost them a lot of money or less money than an audit or a review?
Less money.
Less money, exactly. Should it be very low money, or should we always charge them as much as possible? As much as possible. Now, the beautiful thing about a preparation engagement is that we don't put a report on the statements. So when the reader picks up the statements and looks at them, they have no way of knowing that the CPA was involved. So if they have a problem with the financial statements, who are they going to go to? They're not coming to me because my name isn't even associated with the statements. They got to go to the client. Don't bother me. They don't even know who I am. So we have different levels of service. And if we're lucky in the case of a non-issuer, or I should say, if the client is lucky and they were requested to submit financial statements, whoever asked for them will settle for a preparation engagement where the client prepares it. And on those statements that we actually prepared for them, there typically is a footer that says no assurance is provided on these financial statements, which is a good thing. They can't, hang us up out to dry. So the question becomes, if an audit is so expensive all the way up there, why in the world would a client want to give us all that money for an audit when they're generally the cheapest people alive? So you tell me. Give you a hint. You could take a look at the list on page 6, and you could feel free to mention one of them. What do you think? Why would a client want an audit?
I think one is a publicly traded company would want and need audited financial statements to present to potential investors so we can make good investment decisions.
Good answer. That was Eric.
Yes.
Perfect answer. If the company wants to issue stock to the public wants some assurance that the statements are presented fairly so they don't make a bad investment. So, yeah, definitely would require audited financial statements. And if it's stock offered to the public, which means it's an issue where they're regulated by what group of people? Give you a hint. 3 letters. First letter is S, the last two are EC. First letter is S. Last two letters are EC. Put them together. What does it form?
SEC.
SEC, which is what? Securities.
Securities Exchange Commission.
Right. So they require the audited financial statements. Cool. Public company, meaning an issuer, has to have audited financial statements. If they're thinking of going public, there have to be certain filings with the SEC. One of the requirements is audited financial statements. That's a good reason to have an audit. And then if the bank insists on audited statements because the client is applying for a loan, well, then they have no choice. Then the client would want the audit. Upper management may say, hey, when you CPAs come in, the employees get nervous because they know you're checking on things. So the odds of them, we'll say, screwing up, whether intentionally or unintentionally, would be minimized if they see that the auditors are there. So it's a protective measure for management. That's one of the reasons, but it's going to cost a lot of money to have an audit performed. Then if the client says, we've had some bad years, things are not going well here, so we'd like to file for bankruptcy. Is that a rare situation or a quite common situation today where the client wants to file for bankruptcy?
Common.
It's very common. Every time you pick up the newspaper, you see another company's filed for bankruptcy. It's pathetic. I think I saw Saks Fifth Avenue. The parent company is filing for bankruptcy. I mean, wow, scary.
But a professor,
Yeah,
don't they do that on purpose though?
yeah. They file for
Uh,
bankruptcy on purpose because they go into the bankruptcy court and say, Your Honor, we've had some bad times. We owe $200 billion, but we only have $1.98 to pay off our debt. So, Your Honor, please, can you discharge us in bankruptcy? Let's make it Chapter 11, cancel out all the debt, let us screw everybody that we owe money to, and let us start from scratch. Isn't that basically what you're saying when you go into bankruptcy court?
yeah, that's crazy.
Yeah. Is that fair if you think about it?
No, not really.
Not really. And then after you get discharged in bankruptcy, you start all over again. And then you start doing this to everybody again. That's turning the screw. I don't think it's proper, but this is what we do here in America. So if you go into the bankruptcy court and say, Your Honor, I need to be discharged in bankruptcy, you think the judge says, well, you look honest. Yeah, I'll just discharge you. Or do you think that the judge wants to see audited financial statements to really feel that the assets and the liabilities that you say you have really represent assets and liabilities of the entity? The judge is going to want proof. So, audited financial statement. It's terrible how you can go into bankruptcy, get out of it, and start all over again and do the same thing. Could also be for insurance purposes. Let's say that the client has a manufacturing business. They have this massive plant where they manufacture their goods. And unfortunately, there was a fire. Everything is destroyed, leveled to the ground. Anybody ever watch a TV program called Chicago Fire?
No.
There's no one no. You people, oh, I forgot. You people don't watch TV because you're too busy studying. Ah, cool. Now Manville watches Chicago Fire. I like Chicago Fire. Wednesdays, every Wednesday. So if you ever watch that, you'll notice there are a lot of fires and buildings do burn to the ground. So what do? You call up your insurance company, and let's say it was the old MetLife company, which is now Farmers. But MetLife, uh, I thought was better than Farmers, but that's okay. But the mascot for MetLife was Snoopy. Who's Snoopy? Is that Snoop Dogg? We're talking about the cartoon character, Snoopy. So you get on the phone, you call the insurance company. They answer the phone. You say, I need to get a check today because I want to start rebuilding. They put you on hold, and in the background, you can't hear it, but they're talking. And the way they talk on those Peanuts cartoons, Snoopy cartoons, wah, 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 wah. You get back on the phone, and they say, well, Snoopy has decided not to give you the check today. We need some proof as to your loss. We want audited financial statements. So that would be another good reason why a client wants an audit. It's fine. If you want to engage in a merger or an acquisition, if you're interested in acquiring another company, you think you'd like to see audited financial statements to know whatever assets and liabilities they say they have really exist? What do you think? Yeah. So really, there has to be a valid reason why you would want an audit. Otherwise, go for the lower levels of service. Any questions on the financial statement audit?
No.
Cool. But there are other types of audits, as you see on page 6 of 50. The first one is called a compliance audit. A compliance audit is performed to determine if there is compliance with or adherence to rules and regulations. Compliance with or adherence to rules and regulations. If you graduate, rephrase that, when you graduate from Queens College, you're probably going to be looking for a job, unless you're marrying rich, in which case, feel free not to work. If you are looking for a job, one possibility outside of public accounting is to work for the IRS. What's that stand for? To me, it's the Infernal Ripoff Service.
Internal Revenue Service.
Internal Revenue Service. So you could become a tax auditor for the Internal Revenue Service. Is that a good job or a terrible job? What do you think? Good job or bad job? Repeat after me. I want to hear it. Any job I can get
Any job I can get
is a great job.
is a great job.
Right, that's true. I mean, if there's only one job for you to accept, then it's a great job. You take the job. I mean, I knew somebody who got fired from his job as a computer programmer in the financial markets. He was unemployed. And the only job he could get, because it was around holiday season, was to get a job at Macy's, stocking shelves. He wouldn't take the job. It was beneath him. But the truth is, if it's the only job, isn't it a good job? Yeah. I mean, I'm a
Yes.
CPA. If I wasn't teaching and I didn't have any clients and I needed money, I'd take any job whatsoever. I'd even work at Mickey D's. Instead of calling it Mickey D's, I might change it to Nicky D's to conform with my name. So, yeah, you get a job with the IRS. That's a good job. It used to be better. Would you say that the times we're living in are exceptionally good or, yeah, no? Exceptionally good or, no? You tell me. I'm not going to get into any political discussion, but are the times good or, yeah, no?
Bad times.
Was that?
Bad times.
Bad times, exactly. Now, it used to be if you got a job with the IRS, which was a good job, that was compliance auditing to see if there's compliance with or adherence to tax rules and regulations. That was a great job. The pay wasn't the highest, but you had job security, guaranteed vacation, guaranteed pension, guaranteed health benefits. It was almost impossible to get fired from. I mean, you really had to do something bad, like, I mean, if you cursed your boss out, you weren't going to lose your job because you had job security. Today, do you have job security at the IRS? Or has there been a firing of individuals in that organization based on some administration's policy? What do you think? Security or not secure anymore?
Not
No
secured.
jobs.
It's not like it used to be, but it used to be a great job because you had that job security. Now you could actually work for the IRS auditing individual tax returns, or you could do corporate or business tax returns. And two different jobs. One is a revenue agent. That's the one where you go out and audit businesses. That was a great job. That's one possibility, but it's a compliance audit to see if there's compliance with tax rules and regulations. The next type of audit is called an operational audit. Is that where you cut into the client's financial statements, rip them apart, and then sew them back together? Operational? I don't think so. An operational audit is performed to determine if there is operational effectiveness and efficiency in a business's operations. You think that's the type of audit that we as CPAs do normally on a day-by-day basis, or no, it's, an exception to the rule? What do you think?
Could you repeat that? Sorry.
I could. So let me rewind. An operational audit is performed to determine if there is operational effectiveness and efficiency in a business's operations. Do we as independent CPAs do that every day? Or would it be the exception to the rule? It's a unique instance. What do you think? It's a good question. What do you think? Do a mic check. Check. 1, 2. Check, check. Can you hear me? Check, check. Did you all hear
Oh,
me?
can you repeat the question again? I'm sorry.
Yeah. Do you think that as independent external CPAs, we perform operational audits very frequently?
Yes.
No. Esteban got it right.
No.
No. It's a unique situation. I mean, we're primarily, as auditors, concerned with the financial statement presentation. For the most part, we couldn't care whether the client is meeting their operational goals, like pumping out X number of units a month. We couldn't care pretty much whether they're expending the least amount of their resources to generate their revenue. All we care about is what is presented on the financial statements is presented fairly in all material respects in conformity with the applicable financial reporting framework. So an operational audit is really a unique situation. In my entire career, which we now know spans just about 50 years, woof, you know how many operational audits I've been involved in? One. That's correct. Just one. When I had worked for a CPA firm, one of their clients decided in the accounting department that they needed a new computer system. And we're not talking microcomputer, we're talking about a mini computer. They said the system can't handle all of the activity and it's not capable of generating the information they need. So they wanted a new computer system. So they went to high level management and asked for it. And high level management says, well, we're not just going to take your word. We want the word of the independent CPA. So we'll hire them, engage them to come in and perform an operational audit. And if at the end of their work, they've determined that the systems that they have are not effective and efficient, effective meaning meeting their goals, efficient meaning spending the least amount of their resources, then we will take it under advisement and we will get you a new computer system. Do you think that was an exciting engagement or boring? What do you think? Exciting or boring? Boring. Oh, was it boring? Now, there were two people who were performing that audit, me and the partner. At the end of the work, we had to discuss the results. So I went with the partner into the office of management, and pretty much the partner was explaining everything. Now, if my mouth isn't moving, if I'm not working, I have a tendency to do what? Fall asleep. So do you think I fell asleep in front of the client? Yeah. How did I know I fell asleep? Because I remember it was like a jolt of electricity. I went like that and I woke up. Fortunately, nobody had noticed that I had fallen asleep. Boring. That was the last operational audit I was involved in. The next possibility for an audit is what's called an internal audit. An internal audit is performed by an auditor from the inside, looking inside. See, when we do audits as independent CPAs where outside is looking in, here the internal audit is done by an insider looking in. And they're concerned with everything about that company. They're interested in the financial aspects. They're interested in compliance with laws and regulations. They're interested in the effectiveness of internal control. They're interested in everything in connection with running that business. Would it be a good job to be an internal auditor? What do you think? Yes. In fact, you could become CIA. What's CIA? Is that Central Intelligence Agent?
Yes.
Well, yes, but that has nothing to do with accounting. CIA stands for Certified Internal Auditor, which means you took the exam given by the IIA, the Institute of Internal Auditors. You had the experience and you passed the exam. They give you a certificate that says, feel free to add 3 letters after your name, CIA, Certified Internal Auditor. It's a good job. You have to be a unique type of person, unique in the sense that if you feel the need to be loved by your fellow workers, this is not the job for you because your mission in life is to find things that were done incorrectly by the employees, which means you're going to have to think on these individuals. Got to be a whistleblower. Now, could you imagine if you were friendly with the people in the company and you had to report their malfeasance, their misdoings? Are you going to be friends with them after? No, they're not going to be friends with you, that's for sure. So, internal audit is unique position. Plus, sorry, if it's a big company and they have offices throughout the world, you as the internal auditor may have to fly to those other countries. How many people would like that? Flying all over the place.
I
Anybody?
would.
You would. Who's
Yeah.
that, Eric?
Yes.
Cool. So this is the job for you. Me personally, I like my feet to be on the ground. So I don't really like to fly. I haven't flown in who knows how many years, many years. And it's a joke because my future daughter-in-law is they used to call them, what's the one who's on the plane that helps you, in the event of an emergency and stuff like that? Is that called flight attendant?
Yes.
That's the proper terminology. So she's a flight attendant. Doesn't bother her to fly. She loves to fly. But for me, no, not for me. So if you like to fly, you can become an internal auditor. And then the last type of audit that's possible is called a government audit. That's not where the government is auditing you. You are auditing the government. Highly unique field. Got to be trained in government auditing. They have their own rules. You could work for a firm that audits primarily government entities, government agencies, and or not-for-profit organizations. That's a good area to go into. The only caution I advise you about is that if you work for that type of CPA firm that audits government programs, we'll say, and then you decide you want to go to another CPA firm that audits proprietary entities, they may say you have no experience in that area. But a government audit is a fine thing. That was the type of audit that uncovered some malfeasance on the part of the city of New York years ago. They determined that an individual in the Board of Education spent well over $100,000 on furniture for her office. Not a good thing. Then there was a mayor, no names, but it was uncovered that the mayor had the government spend a lot of money on a headboard. A headboard is something you put behind your bed so that you could lean up against it and read. Well, can't you just sit up and put a pillow behind your head and lean against the wall? Sure, you could. But that government audit uncovered the unreasonable expenditure for the headboard. So you can go into government auditing. But again, you have to have training in government auditing. So, but the one that we're going to be concerned with is the financial statement audit. Now, in order for us to perform a financial statement audit, we have to follow what's called US GAS, not GAAP, GAS. GAS stands for Generally Accepted Auditing Standards. And the US just indicates the country of origin. So pretty much everything that we're going to be talking about for the rest of the semester, except for my rare interjection regarding rules for audits of issuers, is based on audits of non-issuers, meaning private entities. And in that case, we have to follow US GAS.
I got a question.
Sure.
What's government audit again? Because my internet was breaking up.
Say that one more time.
Can you explain again what's governmental audit? Because my internet was breaking up.
Yeah. Government auditing is when you, as an independent outside auditor, get to audit government programs and entities. So you get to figure out if the government did anything wrong. So the case that I mentioned, two cases, the city of New York government was spending money on things that really weren't necessary. We good?
Yes.
All right. You interested in doing something like that where you get to, pick on the government?
No, I like auditing. I like the internal auditing.
Internal auditing. That's cool. All right. So perfect area to go into. Like make plenty of money there. You work for a public company, become the head internal auditor. Perfect. Excellent. All right. Any other questions so far? That would be no.
No question.
Okay, just give me 1 second. Today's what? Monday? Monday, 2/2. Okay. So what time is this class supposed to be over?
11:45.
And what time is it right now?
11:45.
11:45. So why don't I tell you to all have a nice day, stay warm, stay healthy, be careful out there, and we'll reconvene on Wednesday. And how do we close the class? Well, Esteban got it right. What do we say?
Tata.
Ta-ta.
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 That's all.
Ta-ta.
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 That's all.